What's going on, everybody? Back at it today with another video. In today's topic, I wanted to cover something that a lot of people have asked. Not just me, but YouTube, Google, other resources. The question is leasing or buying. It's an age-old question that everybody has asked at some point in their life, specifically new car buyers who don't really know the difference between the two and how one works and the other does. There's a lot of stigma around leasing, in my opinion, and I think that's from an older generation who are used to buying everything outright without having to take on debt or credit. And so I think leasing can be a great option, and I think buying can be a great option, but it just depends on your situation. Now, it's a very complex subject with a lot of different variables that make up the answer. But I'm going to try to simplify it as much as I can, and I'm going to show you the difference between leasing and buying, what you're expected to pay for leasing or buying, and some of the disadvantages and advantages of each other, as well as kind of narrow it down and make it simple for you depending on what kind of buyer you are. I think the most important thing to consider when you're deciding whether you want to lease or buy, whether you're a new car owner or you've owned cars in the past, are you a short-term, a long-term, or a medium-term buyer? And that will probably help dictate what kind of option you should take, whether you should lease or whether you should buy. So let me break down leasing and buying for you. Okay, let's take a look at leasing. Okay, so you know some of the advantages of leasing include very few repair costs. You've got everything under warranty. Everything's under warranty. And you have no worries about depreciation. Why? Because you're going to give back to the dealer at the end of the term. Okay, you can keep it, but in this scenario, you're giving it back to the dealer at the end of the term. Other benefits is that you don't have to worry about selling the car. You can just give it back. You don't have to worry about haggling. You don't have to worry about meeting people and selling your car. You just give it back, no worries, hands off, and you get a new car every 2 to 4 years. I think that's a good benefit for people, and this is what I mean by short term. Short term investor or owner, short term owner. If you're the type of person that wants to have a new car every 2 to 4 years, you want the latest technology, you want the newest equipment, the newest styling, leasing is the best option for you. Yes, you might lose some equity, and that's what I'll list in the disadvantages here, but the benefit is that you can get a new car every 2 to 4 years, and payments are typically lower than financing. If you can read my chicken scratch. So these are some of the advantages of leasing. Okay? This is not all the advantages, but these are probably the main ones that people will list out. And under these, the few repair costs, I mean that since you're under warranty, and usually the warranty lasts about 3 years, 36,000 miles. Some go all the way to 50. Hyundai does 100,000 mile. But you're not going to have to worry about paying for long-term things, because after about the 3 to 4 year mark, you have to do big repairs. You have to do a full-on drainage. You have to do a full-on transmission oil fix. You have to do brakes, most likely, or tires. When you do a lease, you don't have to worry about that because you are giving the car back to the dealer at the end of the term. Okay? You're giving the car back. So these are some of the advantages to leasing. Let's list some of the disadvantages. If you can read that. Disadvantages. Okay. So the issue is there's mileage restrictions. This means that you can only usually, depending on the lease, go from 10,000 to 12,000 miles per year. Okay? That is the limit that the dealer provides, 10 to 12,000 miles. For every mile over, it's about 25 cents, which you may not think that that's a lot, but when you drive 2, 3, 4,000 miles over, that could end up being almost $1,000 that you're paying out of pocket. So you got to pay attention to this. Are you driving more than 10 to 12,000 miles? If you are, then it's probably better to buy the car. Now, you could just lease it till this term, 36 months, and then end up buying it out, and then nobody cares about miles. But the issue with that is that you've been paying more for a lease because lease typically has high interest rates. This is what I mean by this. Okay, this is a very important fact that nobody really tells you about. Within the lease, there is a certain amount that's designated towards interest. That means that, yes, you have a fixed payment of, say, $405 per month, but only probably around, depending on the lease term, 80% of that goes towards your principal, 20% goes towards interest. Okay, now it depends on what kind of terms you have, and you might want to look into that when you're getting the lease, and you can negotiate that amount. But that means that at the end of the term, if you were buying out over the course of 3, 4, 5 years, your interest rates probably right now range around 3 to 5% depending on your credit score, sometimes lower, sometimes higher. Not 20%. I mean, unless your credit score is pretty bad, you're not going to be paying 20% on interest on a finance. But on a lease, you are, and you're thinking you're not because you're paying less than, if you financed it, it'd be $700 a month. So this is a lease, this is a buy. But $700 a month, you're only paying 3% interest, whereas here you're paying 20% interest. So you're paying high interest rate, and if you end up buying out at the end of the term, you're actually paying more 20% during the 3 years, and then you're paying 4 to 5% that you're going to pay later on your loan. Okay? That's another disadvantage. Another thing is that you have lease end fees that I talked about. And probably the last, which is you probably have almost zero equity. So here are some of the advantages and disadvantages of leasing. If this stuff satisfies you, then you should lease. If this stuff doesn't matter too much to you, then you should definitely lease. However, if some of this stuff is a big drawback for you, like the lease end fees, no equity, you can sell it, but you're probably not going to get anything out of it, then you should probably go with buying. So let's look at buying a car. Okay, so let's look at some of the advantages and disadvantages like we did with leases. Advantages and disadvantages. Okay, so some of the advantages is there's no mileage restrictions, which means you can drive as many miles as you want. There's no restrictions on yearly limits or whatever. It's your car. And that brings me to another thing. It's your car, which means you can do alterations. If you want to upgrade the sound system, if you want to put in different sound systems, speakers, rims, if you want to do crazy lowering and lift kits, you can do that because it's your car. In a lease, the most they'll probably let you do, it depends on the deal you have, is probably window tinting, which isn't that much of an upgrade. Another thing is, since you're making bigger payments, let's say $600 a month, you're going to gain more equity. And this is the most important one. More equity. Okay? That means that in the same time that you'll be paying for the lease for 36 months, rather than paying $450 a month and 20% of that going towards interest, so only 80% going towards your principal, this, you're probably getting 95% going towards your car principal payment, which means that in 3 years, you're going to owe a lot less. In 3 years, you will owe a lot less on your car than lease. So if you want to sell your car in, say, 7, 8, 9, 10 years, you're going to pay off this car entirely, but your car might be worth $10,000, $15,000, so you can still sell it and put that money into your pocket. With a lease, after 3 years, you might be able to sell it depending on the car and make $1,000, or in most cases, you're not even going to be able to sell it and you're going to have negative equity, which means that the car is actually worth less than what you owe on it. And without giving it back to the dealer, if you decide to buy it out, you're stuck with that negative equity. And until you pay down the car enough, which you might not ever even be able to, then you're having this gap of negative equity, which really is just a crappy situation to be in, because repair costs are going to start mounting. You're not going to be able to sell the car if you're in financial need. It's just a very bad situation to be in. And typically, you have lower interest rates. Okay? Now let's look at some of the disadvantages. Now, the disadvantages are pretty much very similar to the advantages of leasing, is that you have a higher down payment, typically $7,000, $6K. You have larger payments, probably around $500 per month for like a Honda Civic, whereas that's almost a Mercedes lease. Also, you have to worry about future repair costs. Future repair costs, okay? And you have to worry about selling your car in the future, which for most people that is just a hassle, because you have to meet with people, you have to haggle pricing. It's kind of just an annoying thing to do, because it's not very easy to sell your car. It depends on what car it is, but this is kind of a very difficult thing for people to deal with. There's other downsides to buying. You're stuck with an older car, older technology. So there's some downsides, but overall you're owning it. I would say this is best for long term, whereas this is best for short term. Okay? So you have short term and you have long term. So these are some of the advantages and disadvantages of buying. So now let's take a look at the actual numbers. Okay, so let's take a look at what the payments look like for a lease or a buy. So typically, let's say you're buying a $50,000 car, okay? And you decide to go the lease option. So leasing, you're paying for about, say, 36 months. And you're paying about, say, $450 per month, okay? So within 36 months, your car, say, is worth $28,000, and then you can choose to either give it back, you can give back, you can sell, or you can continue to own, okay? This is the leasing option. Leasing, okay? Now the issue is depreciation is typically very large within the first few years of ownership. So you hope that it at least breaks even if you continue to own it, or hopefully it's actually lower depreciation, so that if you do decide to own or sell it, you can catch that difference, which is the equity you have in the car. So the difference between this number and this number is your equity, okay? Now, if it's lower, God forbid, and you decide to own it or sell it, then you have to pay for this, which is your negative equity. So if you decide to sell at this point, when the car is 36 months into it, and you want to sell it or own it out, your car may only be worth $24K, but your payments left on the car after the lease are $28K, which means you have negative equity. Okay, you want to be in the spot where your car is worth actually $30K, so that you can own that $2,000 and not be in the negative $4,000. So this is the principal issue with leasing a car, is if you decide to give it back, you don't care at all. You don't care about depreciation. That's the dealer's problem. That's not your problem. That's the dealer's. But if you decide to sell or to own, you have to realize this difference in equity, positive or negative, depending on the car. Now, that's why it's good to have Toyota Tacomas, it's good to have Hondas, because they have very low depreciation, so you're going to have a much larger amount of equity, okay? Now, this is important for the medium-term investor, because as a medium-term investor, you are probably going to either lease and then own it, or just go for the buying option. Now, the buying option I will detail right now. Okay, so now let's look at the same example, but let's pretend that we are buying a car. So we are going to start out with a $50,000 car. We're going to probably buy it out in 60 months or 5 years. And so 5, 4, 3, 2, and 1. And you're probably going to end up paying, just like most buyouts or finances, you're going to be paying a lot of interest in the beginning, and then you're going to go down to zero. So then you're going to start making principal. But in the beginning, you're making primarily interest payments, so your car value actually isn't going down until you reach probably the 36-month mark is when you're starting to pay down more principal. This graph isn't accurate, but if you want, you can go on to any credit union or bank site and you can type in the principal amount, the interest rate, which we're assuming around 5%, and it will shoot out this graph and show you how much money you're actually paying towards interest and how much towards principal. But let's say in 3 years, your car is worth somewhere around, this graph isn't a scale, but $20,000. That's how much you owe to the bank in 3 years, okay? Now, your car probably only depreciated, and this is the benefits of buying, is your car only depreciated probably to around $24,000 or $25,000 is how much your car is worth on the market. So the market price is $24,000. So that means this difference between here and here is your equity. The same thing we talked about earlier, but this is positive $4,000. So it's positive $4,000, okay? Because you're going from 20 to 24K. So in 3 years, if you decide to sell this car, you're going to make $4,000 on it. Now, as compared to the lease, or we talked about earlier, there's a chance, most likely, you're either going to be able to only sell it at the $28,000 in 3 years, or most likely, you're going to be looking at negative $4,000 in equity if you decide to buy it out or to sell it. In a buyout or in a finance, since you are making bigger payments, you're probably paying around $700 per month compared to the lease where you were paying $450 per month. $700, $450, big difference. But since you're making bigger payments, you're able to gain back equity in the future when your car's depreciated only, say, 26K, if my math's not failing me, whereas your car payments are only 20K. So that's the benefits of buying. If you are the type of person who buys a car and owns it for your life, then you're going to be benefited with doing a buyout option. If you're the type of person who wants a new car every few years, your best option will be to go with the lease. So medium term, you have to decide. If you're looking to sell in the future or own for a little bit, then it's best to probably stick with a buyout unless you have positive equity in your lease. And that just depends on the car. Thanks for watching, guys. I hope you catch my next video. If you have any questions, please comment below, like, share, subscribe. Let me know what your questions are and I'll be happy to answer them. Thanks for watching.